Welcome to this explainer. Okay, today we are diving into Phase 2 of the Finlit Zambia curriculum. Now, if Phase 1 was all about those foundational basics, understanding your pay slip and getting a budget set up, Phase 2 is where things get really fun. We are shifting gears from just managing the money you have to actively building and protecting your wealth. And we're going to do this by jumping straight into a totally hands-on financial simulation.
So, I want you to picture this. Imagine waking up today, you're a major stakeholder in a high-stakes scenario, and someone just hands you a massive chunk of capital with one very clear directive: make it grow. What's your literal first move? Do you play it super safe, or do you go all in and take a massive risk? Well, that giant number, K50,000, is the exact starting point of the Phase 2 Stock Market Challenge. Over a simulated timeline, your team gets this 50 grand in virtual capital to really test your real-world financial survival skills. It's basically a sandbox. You get to apply big wealth-building concepts without, actually losing your shirt in the process.
To master the rules of wealth and absolutely nail that final pitch, here is our training map. We'll cover the stock market challenge, managing and transferring risk, navigating the lose arena, the housing reality check, and finally, the final investment proposal. Let's get to it.
Section 1. The Stock Market Challenge, the ultimate test of financial skill.
All right. According to the Phase 2 project guidelines, you and your team of 3 to 4 people are going to manage your K50,000 portfolio over the course of 4 weeks. And you're not using some made-up, fake market mechanics here. You are using real, historical data right from the Lusaka Securities Exchange. You've got to track corporate news, monitor those price movements, and submit weekly buy and sell decisions. Oh, and every single decision? Yeah, it has to be justified.
Moving on to Section 2. Managing and Transferring Risk. Module 2.0, Protecting Your Capital.
Look, you simply cannot win the wealth game if you get totally wiped out by one bad event. Financial risk management is really just about identifying risks and figuring out how to handle them. And the absolute smartest move for catastrophic risk? Transferring it to a licensed provider. In Zambia, that means using things like NHMI, which is mandatory and takes just 1% from the employee and 1% from the employer to cover major health events. It also means getting motor vehicle insurance. Third party is legally mandatory, by the way, along with life and property insurance. Basically, you're paying a small known premium right now to completely avoid a huge, devastating loss later.
But how does that kind of risk management actually apply to our K50,000 stock market portfolio? Well, it all comes down to diversification. You never ever put all your eggs in one basket. By spreading your investments out across different asset classes or sectors, you drastically shrink the impact if any one single company or industry takes a massive hit.
So, here is how that translates directly into the game's most critical rule. You are strictly forbidden from taking all $50,000 and dumping it into a single company. No way! Your team has to hold at least 3 different loosely listed stocks at all times. This mandatory diversification is what buffers your virtual capital against those unexpected shocks that just hit one sector. Oh, and no short selling is allowed either. We are playing a long-game growth strategy here.
Section 3. Navigating the Luce Arena. Module 2.1, Basics of Investing.
Now, if you want to grow your wealth, you've got to master the risk-return trade-off. It's all about balancing safety against potential reward. For instance, government treasury bills offer very low risk with a really solid 12 to 18% annual return. But then, look at Luce shares. Sure, they carry a medium to high risk, but the returns are variable and can be absolutely massive. Just to put that into perspective, the Luce All-Share Index gained an incredible 93% in 2022. You just have to decide exactly how much risk your team is willing to stomach to chase those high rewards.
The Luce is going to be your primary battleground for this challenge. It opened back in 1994 and, as of early 2025, features 20 listed companies with a market cap of over 276 billion kwacha. You're going to be looking at buying stakes in heavy hitters, companies like Zanaco, Zambeef, or Airtel. But honestly, the absolute best part about the Luce? Right now, there is 0 capital gains tax on share sales in Zambia. None. That is a massive tax advantage if you're an equity investor looking to build real wealth.
Section 4. The Housing Reality Check. Module 2.2. Evaluating Major Purchases.
So for a lot of people, homeownership is like the ultimate symbol of wealth. But this module demands a really serious reality check. See, renting gives you incredible flexibility and keeps your capital liquid, even though, yes, it builds 0 equity. Buying, on the flip side, does build long-term equity, but it drains your liquidity right out of the gate. You're going to need a 10 to 20% deposit, plus a 5% property transfer tax, legal fees, and then you have to cover all the ongoing maintenance.
I really want this number to just sink in for a second. 2,740,000 kwacha. That is the jaw-dropping estimated total repayment cost if you buy a 600,000 kwacha property on a 20-year mortgage at a 28% interest rate. Your monthly repayment literally becomes more than double what it would cost to just rent that exact same house.
And the curriculum hits the nail right on the head here. In a high-interest rate environment, borrowing too much can completely trap your wealth. The cost of carrying that debt vastly exceeds the actual physical value of the house itself. This is exactly why saving up a much larger deposit and taking on a smaller mortgage is absolutely critical if you're going to choose buying over renting.
Section 5. The final investment proposal, presenting your wealth strategy.
Okay, so at the end of your 4-week stock market challenge, your team can't just slide a spreadsheet across the table. You have to deliver a formal 5 to 8 minute investment proposal to the group. Imagine you are pitching an actual investment committee. You need to explain your strategy overview, like did you genuinely research these companies or were you just guessing? You've got to compare your performance against the Luce All-Share Index, provide a real risk analysis of the volatility you experienced, and then share the actual lessons you learned about diversification.
And I'm going to let you in on the real secret of this entire challenge. Winning the game by having the highest virtual bank balance, that is not the primary goal. True victory here is proving that you actually understand the mechanics of wealth. The curriculum explicitly points out that the teams who make mistakes, lose some virtual money, and then honestly analyze why it happened, they are the ones who learn the most about risk and real market behavior. Well, you now know the rules of the stock market challenge. You know how to manage your risk, you understand the heavy realities of debt, and you know how to build a diversified portfolio. So I'm going to leave you with this final thought. If I handed you $50,000 right now, today, what is your very first move? What is your first Luce stock pick? Good luck out there in the arena.